Paul Scurrah resigned as the Chief Executive of Virgin Australia today following quite a year of turmoil for the airline, as you know. It comes after speculation that all was not well between Scurrah and new private equity owners Bain Capital. In a statement to the ASX, Virgin's administrators confirmed former Jetstar boss Jane Hardlicker would take over the role from next month. Now, my next guest will know all the ins and outs, but more importantly, what it means for you. Geoffrey Thomas is an aviation expert with 45 years experience in the industry. He's the editor-in-chief of airlineratings.com and he joins me now from Perth. Geoffrey, great to have you on the show. I think it's really important because we've got to have competition in our airline industry. While we're not flying, I know, but it's critical on the other side when we come out and we do want to get out and about. How are the events today going to play out?
Well, look, it's a very, very interesting situation. The industry basically felt that Paul Scurrah was doing a very good job in turning Virgin Australia around when the whole airline industry hit the COVID-19 mountain, and many airlines have gone bankrupt. Many airlines have been rescued by their governments. Virgin, as we know, fell into administration, and Bain came through as the successful bidder with a $3.5 billion offer. Now, they said that they were going to retain at least 6,000 staff of the 9. They were going to keep the airline basically as it was. They were going to redefine the product offering slightly and want aspirations to go back international when that sort of opened up. However, since that time, we're talking, June, July. Since that time, of course, we've had the COVID disaster in Victoria, which has devastated plans to reopen the flying economy and the economy in general. You've had Rex come up to say, listen, we're going to launch with 6 aeroplanes next year on the Melbourne, Sydney, Brisbane triangle, the Golden Triangle, and you've got international borders that have been. The opening of those has been pushed well into next year. So the aviation landscape, which was already very bad, has gone worse. And I think that the Bain Capital have seen that they're going to have to make more cuts to Virgin than they expected to. They're going to have to get more concessions from the staff. And their hybrid model, as they call it, is going to be more down market than up market. And they see Jane Hardlicker, who was a former Bain executive who joined Qantas and then ran Jetstar, as a better person to lead that transformation than Paul Scurrah.
So I'm interested just in a few things there. The low-cost airline, Virgin wasn't that. Virgin was positioning itself as a competitor, particularly even with some business travel, even with Qantas, which kept pressure on Qantas fares. You had a much lower cost option for people and families and everyone with Jetstar. Does this mean that Virgin's going to head the way of Jetstar, and then you'll have, domestically at least, no great competitor to Qantas? Is that where they're stepping up? Because, you see, the thing with private equity is they're always got to screw every single last dollar out of it, and that's often a motivator, absolutely, when they buy it. But that's sort of not what we were sold when this was all happening.
No, indeed. You're absolutely spot on. That's not what we were sold, and that's not what the staff was sold and the unions were sold. But as I said, the landscape's changed. But however, back to the point, yes, Qantas will be the business class airline of choice. We don't even know whether Virgin's going to reopen their lounges. So Bain say, no, we're going to have a hybrid model offering value fares. But we've had an example, maybe an unfair example, this week when it's been exposed that people flying from Brisbane to Perth paying $2,500 business class airfare are getting a 2-minute tub of noodles and a can of Coke as their in-flight offering. Now, if that's where they intend to take the airline, then it's definitely going down market. And so down market, you're going to have Rex, you're going to have Jetstar, which is a great airline, doing the down market thing really well, and you're going to have Virgin maybe just above them. So it's really going to have 3 low-cost airlines and 1 premium carrier.
One of the issues I'm really concerned about in all of this too is regional Australia. They really rely on-air transport like no one else. They pay big money to fly. Sometimes you look at those fares, it's like flying international when you move around, particularly big places like Queensland and WA. What does it look like for regional Australia in this Virgin play?
It looks tougher for regional Australia. I mean, in the previous Virgin Australia, I think a lot of the regional routes that they operated were cross-subsidised by other routes around the network. They were playing for a large network operation to compete head-to-head with Qantas wherever they possibly could. Post-COVID-19, post-administration, I think every single regional route will have to battle to survive as far as the accountants are concerned. If it doesn't make money, forget it. We're not flying there. So I think regional Australia will suffer, and that's a very great concern. I mean, mind you, Rex will probably step up and say, well, look, we'll do it. But it won't be quite the same as say, a flight on Virgin Australia. But yes, regional Australia is going to suffer out of this.
And that's a real worry. I think the governments will all need to focus on that because it's critical, just to move produce, to move people, to move workers, absolutely critical, and tourism too, to get us back on our feet. Geoffrey Thomas, thank you for all your analysis and your expertise. It's been great.
Pleasure.